Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right.
Hello, Bruce. Happy Monday.
Yeah, same to you, Tom. It was an active week, that's for sure. We got a lot of stuff going on. Last week, interest rates got hit pretty hard, but we kind of recovered a little bit on Thursday and Friday, but not quite as much as we lost over the last 2 weeks. I do see a bit of a recovery happening here. It's just we got to see what happens and if it's going to stay steady.
Yeah, I know the jobs report was a little bit of a mixed bag, right? So it came out, it was lower than expectations, and they've been adjusting every month. They've been adjusting the job numbers lower. So they come out and say 230, and then it's really 170. Yeah. So I think if they keep doing that, that's going to show a slowing of at least of the economic growth, whether or not it's actually a slowing of the economy.
Well, that's what they want to curb inflation too. And inflation's still up, man. You have to realize that when they say they're trying to get inflation down to 2%, that means we're not really going to be at 2%. We're going to modify what things have already been, right? It's not like, hey, I paid $2 for a gallon of milk and now it's $4. It's still going to be $4. It's just not going up to $6.
That's right. That's right. Hey, speaking of things going up, and I'll tell you what, I am getting a lot of activity from people trying to sell their condos, but I'm also getting almost no activity from people trying to buy condos.
Yep. It's not a hot market right now, particularly in Florida with all these insurance claims. You got insurance claims, you have roof claims, you have public adjusters convincing them to put new roofs on and making claims. Then you have all this structural integrity issues that happened from the collapse of the Miami condominium.
The Surfside collapse.
Surfside collapse. Yep.
So there's some legislation that came out, two major pieces of legislation. Well, I think it's one, but it's two different prongs. So one is that any building bigger than or taller than 3 stories has to have what they call milestone inspections.
Yes.
And that is when they are at 30 years old. And I think on the coast, it's 25.
It is 20. It's 20. I thought it was 20. It could be 25. It might be 20 though.
And so they have to have this
one,
massive,
like 3 miles of the coast.
I think 3 or 6. Yeah. So it's they have to have this massive study done that costs everybody money, right? It's going to cost the building money that the government's not paying for it, right? And they have to have this study done to say how sound the structure is. And people think of sound structure, they think, oh, the concrete and the rebar, that's part of it. But the windows, the roof, the paint, the caulk, everything, right, counts towards the integrity of the building. Absolutely. Because if you've got bad caulking around the windows, water getting in erodes down the structure,
Absolutely.
And, in a house, it's not a huge thing, but in a condo tower that's 20, 30 stories tall, it can be a real problem if you're letting moisture in there.
Yeah. So you got people that would like to have a condo, but they're looking at the cost of these association fees and they don't even know where is it going to stop?
Right.
How much are they going to increase it? And it's interesting when you see people that live in condos and they're like, I don't understand why the association keeps raising our rates. Hey, newsflash, it's not the association. You are the association. Right. It's you. It's your condo is just a piece of the puzzle. And if it all goes up, then everybody has to pay.
I think a lot of people that live in condominiums don't really grasp that. They think like an apartment mentality where It's like, well, I'm paying my rent. And so, everybody should take care of the outside. And while they do take care of the outside, it's your money that they use. It is, right?
It's all you.
And you're an owner. You're a common owner in the whole community as opposed to just your building. And I think a lot of people miss that point.
And you combine inflation with that, which means that the landscapers are raising their fees. The plants they got to plant are more expensive. The chlorine for the pools is 3 times more than it was 5 years ago. I mean, everything costs more
All the
money.
maintenance, all the insurance is ridiculous. I mean, the one that I'm working with right now, the tower, their insurance went up to $80,000 a month
Good
from
gracious.
45. So they went from 45,000 a month to $80,000.
Almost doubled.
Yeah. And I mean, that has to get passed on to the owners. And then, so, the other side of that legislation, which I think is the more important side, although the inspections are probably good, the more important side is, they used to be able to vote to not have reserves.
Right.
Right.
You could choose what you wanted.
Yeah, it's like, well, you should have $100,000 left over, but don't worry about it, And then when something bad happens, they have no money and everybody's rates have to go up. And so they were just kicking the can down the road constantly. So the new legislation that actually doesn't take effect until December of this year says that they have to have 100% of their reserves. So, and the reserves are for things that are big, like roofs, building structure, parking garages, anything, paint, caulking, anything, windows, all that stuff, all has to be included. So they have to have a lot of money. So the ones that were running at zero, not only do they have to collect enough to cover the reserves, but they have to find a way to build the reserves.
Yeah. Yeah.
So
now
they're going from 300 to 800.
Yeah. These complexes that didn't have reserves would generally be cash purchases anyway, though. They're not going to be on a Fannie Mae list or HUD list or VA list. But the problem that I'm seeing are not the one-off condo that has no reserves. It's the ones that had adequate reserves that no longer have adequate reserves based on their insurance going up.
Right.
And I want you to think about this. Realtors or consumers that own a condo or considering buying one, if you don't have the reserves, and let's just say you already own a condo and you bought it and got a conventional loan or an FHA loan, if that condominium complex no longer meets the reserve requirements or has adequate insurance, you have fallen off the list. So now a new buyer can't get a conventional loan or an FHA loan. What do you think that's going to do to your value when you are unable to get traditional financing on your unit? Well, your unit's going to plummet in value.
And you know what? Unfortunately, Bruce, a lot of these condominium complexes are run by people that don't care to understand that.
They don't understand it.
They don't care to understand it. They don't understand it, but they don't care to. And that's a real problem. Because
they will when they go to sell their unit and they can't understand. And all of a sudden they're going, why didn't somebody tell me this? So it's a systemic problem. And if it doesn't get handled, it's just going to get worse and worse. And then your values are going to start decreasing. So be involved in your association, understand what the rules and requirements are so that your condominium always falls under those rules and meets the requirements. Then your value will maintain itself and it'll be easier to sell. But
Bruce, how would a association know the rules and B be able to get themselves on the list? Like how do I get an association on the Fannie list, or more importantly, on the FHA or VA list?
Well, and that's interesting because they all have different requirements. So VA generally follows FHA's list. There are some nuances with government loans that don't exist for conventional loans, meaning that if your association requires you to be approved by the association before you can buy there, you're never going to get on an FHA or VA list. They deem that as discretionary or discriminating, and they will not approve it.
They're allowed to have an application, right? But not an interview. Is that correct?
Yeah. If you have to pass certain requirements of background checks and things of that nature, then FHA and VA thinks that's discriminating. Yes.
Okay. So if the application includes like a credit check or an income check, then it's automatically discriminatory.
I don't know. I don't think it's that restrictive, but I think they're looking for people that may have criminal backgrounds or, for me Personally, I think they should have to pass a test. I don't want a pedophile living next to me with my kids.
Sure.
Right.
Yeah.
That's a major problem for me.
Right.
And so I like the idea that they would do a background check or criminal background check, but you're never going to get approved FHA or VA, but you can still get approved conventional. But in order to, and for me to answer your question, there are certain reserve requirements. There's certain deductibles that you have to meet within for your insurance policies.
Okay.
You've got to have the insurance reserves. You got to have, they take and look at how many units do you have, how much the association fees, and how much do you have in reserve if something were to happen, right?
Okay, so that's Fannie, right? That's Fannie Mae for conventional. So if an association meets those requirements, is there a process that they follow to get on the list?
Absolutely. They can solicit Fannie Mae, or they can come to me, and I have a complete condominium department that will review the red flags portion of it to determine if there's something glaring going on, and consult with you on what to fix. Maybe it's additional insurance, it's additional reserve. So then we'll actually physically help you as a consultant go to Fannie Mae and get your condominium on the list. And you know that because I just did that for one of your condominiums.
Well, yeah. I remember you helped us get back on the list, but they at least wanted to, right? I mean, when I explained to that HOA how that was going to impact the values, they were like, yeah, let's fix it. And they cooperated, right?
Right.
So I just meant like people that have been off the list for a decade, a lot of them just don't care to. So I wanted to be able to give them some information about how they can improve the value of their condos, you know?
Well, then what you do is you have to submit to us your budget, your master insurance policy, and we will look at those items to make sure that they're adequate. And we will determine if it meets what we deem to be approvable, and then we'll submit it directly to Fannie Mae on your behalf.
Got it.
So we want to help.
What about that I hear a lot where they can only have a certain amount of units that are investor owned or rental units versus owner occupied? Is that a Fannie?
This is always true for government loans, FHA and VA.
Mm-hmm.
Fannie Mae will not approve a condominium that any one owner owns more than 10%. And there's actually a sliding scale, because if there's only 3 units, and some condominiums may have 1, 2, or 3 units. So there is a sliding scale, but in general, you cannot have some entity, and that includes the association themselves.
Sure.
So if you have one person or the condominium owns too many units, then it's going to be disqualified completely.
Got it.
So you want to watch that.
So there's a single owner litmus test, but there's also an overall community litmus test as well, right?
Yes, there is. And you look at owner occupancy levels. So if it's saturated by investors, then it can become a problem. Fannie Mae and Freddie Mac have their own rules. You can't have more than 30% investors in there in most cases. But Fannie Mae is a little bit more lenient. But even if the condominium association exceeds the investor saturation on a conventional loan, if the buyer is buying owner occupied, that doesn't matter.
Oh, okay. Very interesting. Yeah. It's I'll tell you what, man, it's just like everything with the government, right? It's like the answer to every single question is it depends.
Everything depends. Yeah.
It depends.
And so, some of them aren't crystal clear on what the rules really are either. You have to interpret them.
Jeez, of course, right? They use words like,
hey, listen, by the way, I want all our listeners to know that we're having a Hometown Heroes class. So Hometown Heroes opens up July 1st. We got $100 million. It's going to last for 3 to 4 weeks. That's about all I anticipate.
And I'm seeing a ton of people talking about it. So that money's going to go.
So here's the idea. You first of all join our class. What day is it on? The 23rd, I think it is.
At 6:30. It's right up on the screen.
And that's going to be in Maitland, Florida.
Yep.
Go to webringyouhome.com, webringyouhome.com. We'll put it up here on the screen. You see it coming by right now.
Yep.
Go there and register under the events calendar and register for that event. So, matter of fact, I don't even think we're charging anybody to get in this one, are we?
Nope, we're not
okay.
charging.
So listen, you got nothing to lose. If you're renting right now, you're paying 100% interest rate on your rent. Okay. Don't complain about a 7.5% interest rate when you're paying 100. Okay.
Yep.
Get into the class. We'll get you into it. Hometown Heroes has reduced interest rates. Okay. They've got a lot of benefits to it. You can get up to 5% of the loan amount. 5% of the loan amount. That's huge. You can make up to $130,000 in income.
I think that's the biggest one right there, man.
It's huge. You don't have to be a hero. You'll always be a hero to me, but you don't have to be a hero. which is good and bad. It opens it up to you if you're a construction worker or working in an office somewhere.
Yep.
But it's going to peel away the money much faster.
It does. It does. I know.
The other thing is you can have a non-occupying co-signer on your mortgage. No other down payment assistance programs allow for that.
Crazy.
So
crazy.
There's a lot of benefits.
Look forward to hearing about it again. I know I'm inviting a lot of my buyers that have been on the fence. We're gonna get a great turnout. So anybody that's thinking about getting into it needs to get on it quick because we only have about 40 seats. That's it.
That's about it. webringyouhome.com. Hey, we're running out of time and I got to run. I'm on my way to Punta Gorda to meet with a builder. And anybody out there listening, go to Trinity Family Builders. You can use a loan arranger. Tom will write the contract for you. We can help you out and get all your closing costs paid. How about that?
Awesome, man. Bruce, I appreciate your time as always. Have a great week.
Yep. You